Good morning, everybody. Good afternoon to my friends across the pond. I am Mark Sebastian. I am your only option. Welcome to the State of the Market. In today's show, we're going to be going over the main indicators we've been watching. We're going to talk about world events. We're going to preview Broadcom earnings. So with that, let's dig in and check things out. So to start the day, as you can see, markets are up. This is the first time we've opened higher in several days. The S&P is up about 20 points. The Qs are up about $5, good for about 0.8%. The Dow, kind of an underperformer, up, call it 0.1%. And the Russell 2000 sitting up about 0.3%. VIX down 1.33. The last couple days should have given you some pretty good guidance about trading. All right. And I want to lead off with this, and then we're going to get into what we're watching. The last couple of days, we have opened and hit the lows within the first hour. There's a reason why we call this hour amateur hour. First hour of trading is for closing winners. You got a winner that's working, you take your money in that first hour. Your long puts in the S&P, long VIX calls, own puts in, whatever, a Mag 7, and they're all down. Or up, you own calls. Those are your opportunities to take your money, because we have seen over and over again that, looking at yesterday, that in that first hour, you get a lot of noise. And then usually around lunchtime, we kind of figure it out. So if you look, by noon, we were basically at where we were going to be for the rest of the day. Same thing happened the day before. Open up, down, nice rally. Previous day, open up, down, get a rally. Now, it was a little different. We opened up and then immediately sold off. But take a look. After that first hour, get a little rally here. So, we tend to have, here's another one. Look, open up higher, give it away. And then we rally from there. So what you'll find is there's a lot of noise in that first hour. And markets tend to be at their extremes, and they're trying to force people to panic. That's when New York Stock Exchange specialists, market makers, large order flow people are kind of managing the panic book and basically taking as much money as they can. If I'm a option market maker or a New York Stock Exchange specialist, I'm typically making a big chunk of my dollars, and I mean a huge chunk of my dollars, in the first half hour. Because that's when there's chaos. Markets are wider. Typically, by 10:30, 11 o'clock, that's when normalization starts. And by noon, we're kind of at equilibrium in terms of buyers, sellers. And then from there, the market will make a decision on where to go. So that first hour, you take your winners. So I own. So let's try a practice here. All right. The last couple of days, I have told our traders, actually yesterday in 0DT, I told our traders, you know what? I like owning the 21 puts in VIX. I'm going to be looking to buy some. And in Delta Strike, I said, I like the 21s and 20 puts. All right. Well, we opened up pretty nicely. And, got a little selling. So what do you think I've been trying to do this morning with a chunk of those puts I bought yesterday. I paid 90 cents for the March 21 puts yesterday. So what do you think I've been doing with those puts this morning? Correct. I have been selling some. Why? Because vol opened lower. Positions are moving in my favor. What I'm not doing is if I own, let's say, some NVIDIA puts or Apple puts, I'm not looking to dump those yet. We may roll over. The stuff that's working, I'm closing. The stuff that maybe isn't, I'm waiting on. So I sold about 60% of my puts this morning for those of you that traded along with me. And they're at the level that I'm selling them. So maybe a little higher. So all my traders, you're welcome. All right, now, what are we watching? And it's pretty easy. I continue to keep an eye on the bond market. Bond market is down again. Now, marginally holding these major averages, but with the S&P up 30 points and the NASDAQ up almost 1%, TLT is down. IEF is down. Initially, they're reacting to oil, except oil just turned positive. So you have bonds down, oil up. That's not a recipe to hold a rally. That is not a recipe to hold a rally. Now, yesterday's highs at the panic, that was the time to dump oil or set up a short. And with TLT, kind of different story. I do think TLT rallies as soon as this trade, or excuse me, this conflict ends. I think you could see some bonds start to rally again. You know, one of the reasons why we've seen the selling that we have, and it's polluted into everything that was winning. Right? One of the themes I've been talking about was RSP and its complete outperformance of the S&P over the last 6 months. You know, over the last 3 months, we've seen the S&P flat, the Q's down, and RSP still up 5.6%. So part of the reason why they'd seen this big outperformance was, one, AI the AI buzz starting to slow down, but also this shift in interest rates. Interest rates going lower, the 10-year going lower in terms of yields, plays really favorably into all of these positions. The other piece, since they're industrials, oil price has been low. Now, energy does real well with oil higher to a point. But the rally in oil brings on more, at a certain point, brings on inflation fears. And the inflation fears that it's bringing on, that's rolling into interest rates, which roll into RSP, which rolls into the Russell 2000. Now, I'm here to tell you, you can see the outperformance of the Russell in the last 3 months. I'm here to tell you that the interest rate game, the idea that what's happening over the next couple of weeks, now, if it goes on for longer than, let's say, through the end of the month, different story. But if we're sitting here done by St. Patrick's Day, you know, and the U.S. and Iran are saying, hey, top of the morning to you, then this interest rate discussion goes away, bonds rally, oil recedes, and the Russell and equal weight S&P and the Dow Jones Industrial Average start to rally. And then we move back to some of our other discussions. The things that I think could still, even when we're through the Iran war, roll this whole market over. All right. Now, remember, the things outside of Iran that can roll this market over are twofold. One, crypto. Now, IBIT, as you can see, let me get this to candlestick. As you can see, a little breakout here today. You have money flowing into a risk asset. It's over its 21-day moving average for the first time since January 16th. All right. We get Bitcoin back above 80,000. And we're delaying the inevitable, that is the eventual blow up of strategy, MSTR. MSTR will eventually be going to zero, folks. But now we can kind of put that on the back burner. Then we hit private credit. Blue Owl Capital. And I think the one to watch is KKR. Better run company than Owl. Much better run company than Owl. Right? KKR is Amazon, and Blue Owl is J.C. Penney's. Rest in peace, J.C. Penney's. So, you're watching KKR, that's private credit. That starts to find a floor. That starts to rally. Now we're talking. What's going to save private credit here? The longer this war goes on and the more interest rates spook this market, the more pressure on private credit. Because they're running most of their debt on variable credit. And a good 10% is in software. Now, the software issue definitely remains a problem. But if interest rates start to fall, that variable interest rate starts to pull back a little bit. And private credit's able to start making most of those payments. We're in better shape. And so you're watching KKR. This is one of the names that in credit. This is a great litmus test. Kind of a great what's going on with credit. You're watching IBIT. So there's your oil. There's kind of your private credit area, your kind of things that could take down the market outside of this Iranian situation seem to be under control today. Now, if you're looking for a reason that maybe this market does get some legs to it, your answer lies in the VIX. As I stated yesterday, at the top here, during 0TTE, immediately following our state of the market we did yesterday, I was looking at the market. We're down 28, but VIX is up to 28. I had about 5 minutes to talk to our DTE people, and I made 1 point. The March 21 puts for 90 cents are, in fact, too cheap. And VIX being down as much as it is right now, that's telling you that the initial waves of wild movement that we saw Monday and Tuesday maybe taking a breather unless we get another piece of news. You see, news-driven market moves don't tend to have a lot of inertia. The inflation story that comes with it, not a lot of inertia there. So, if the VIX is going to tank today and Bitcoin's going to be up, I don't even need oil to drop. A drop would help. But I need oil to stop going up. Oil stops going up, the VIX is going to be under 20. Doesn't matter if it stays high. The market can handle higher oil. $72, we would have been begging for $72 a barrel oil at multiple times over the last 20 years. It's not that high. The market can handle stability. What it can't handle is volatility in a market like oil. And if oil starts to pull back a little bit, and believe me, I believe oil is one of the easier shorts right now. If oil starts to pull back and at a minimum stays here, VIX is going to come off. And with that, you should start to see a little bit of a bid in the bond market. Now, there's some very specific plays that we are about to do here at Option Pit. We're going to be loading up Tim Colby's first trade. It's going to be an energy trade. We're loading up a bond trade. And then we're loading up a trade in a defense stock. Because I'll tell you the one thing that I have come away from this is that as expensive as aerospace defense is right now, and I wish I remembered the defend. As expensive as aerospace looks right now, aerospace defense is going to be the next AI boom. One, it's going to start integrating AI. And two, we need a lot of missiles. We need surface to air. We need Patriots. We need air to air, air to surface. We need a lot of drones. Aerospace defense since April of last year has gone from 35 to 91. And you've had your moments to jump in. Could have gotten back in at 50. Could have got back in at 70. This, I believe, has way more upside coming out of this. Now, how do you play it? I'm going to give you the playbook. There's going to be a peace deal. And you're going to see aerospace get sold off. Right? Take a look at, we had a real nice rally into the June stuff. We sell off. Hit that 21-day down to 41. That was your opportunity. So after they announced that piece, we're going to get a couple days of selling. 1, 2. You might be able to get into some of this at 80. Over the next couple of years, maybe this isn't the one. You pick the ones you like. You're going after Kratos. You're going after, maybe a Raytheon or a General Dynamics. You're picking the names you like. One name, the F-35, Lockheed Martin. I mean, the F-35 is clearly superior to just about every plane out there, except for maybe the F-22. But as we move to unmanned craft, I'm not sure Lockheed's in as great of a position. So I'm not going to tell you exactly what stocks to buy here. That's something that Frank, Andrew are going to be doing here in the next few weeks. But what I am going to tell you is that we have a big trade coming up. We're going to be talking about it tomorrow during our live event in Florida. I'll be live again for State of the Market tomorrow from there. And you can get into the triple turbulence trade. This is going to be a defense trade, a bond trade, and an oil trade. And we're going to include that. This is something we just added. It's a special situation that developed in the last week with the Iranian war. You have an opportunity to get into this special situation that include 3 trades and get a virtual ticket to our event in Florida included. So you join the virtual event, you're going to get this special triple turbulence trade. So I want you to click the link and join me and Vaz and Andrew and Frank and Hans and Leisha and now Tim Colby and Hannah and Christian that introduced me in Florida. So we've dropped the link above you in chat. If you're watching me on YouTube, like and subscribe. leave a question or comment. We'll get to it. But join us virtually. And again, we're going to have this new special situation that is included. Yeah, well, Northport, Florida, man, we do have security at the front gate, so they may not let you in, but we'd love to see you. And if you are in the area in last minute, I think we have one seat left. You can call the team 888-872-3301 and see if there's room to join live. Can't quote me on that. All right, everybody. Click the link to join. Watch out for this triple threat trade. It's going to be awesome. Triple turbulence trade. And keep an eye on KKR, energy, Bitcoin, bonds, and that VIX. All right, folks, until tomorrow, I am Mark Sebastian. I am your only option. Join us at 10 a.m. Eastern every day here. All right, everybody. We'll see you soon.